Welcome everybody to the Scale Up Show. This is Ryan Staley, your host. I am here with Russell Rothstein. Russell is a two-time Bootstrapped founder. He's the father of 5 kids. He's currently the CEO of IT Central Station, which has basically a $3 trillion, that's trillion with a T, market opportunity in enterprise tech through crowdsourcing, product reviews, and he's grown to 8 figures plus after 9 years of bootstrapping, and they just took on $30 million in funding. So super excited to go through your journey today. Russell, welcome, man. Happy to have you on the show.
Good. Thanks for having me, Ryan.
Yes. I reached out to you kind of like we were talking before because I saw you on LinkedIn. I saw about your press release, and I love the fact that you bootstrapped for 9 years to get to where you're at, because I talk to so many founders and they're obsessed with getting funding right from the get-go. And so really excited to hear your journey on kind of how you got there and what you learned along the way, and, kind of some secret sauce of what it takes to make that happen. So could you give everyone like a backdrop on your superhero origin story in terms of how this came about, how you got 5 kids, the whole everything?
Yeah, thanks, Ryan. So super. So the background for starting IT Central Station, which we're renaming to PeerSpot starting January 2022. And the way it started was back, and so we've been bootstrapping for 9 years. We're not the overnight success. We're the 9-year success and growing company because we've been slowly building time over time this business. But we started it now 9.5 years ago. And so rewind back to 2000 and it was about the end of 2011. And I was having dinner with Naftali Marcus, who ended up being my co-founder. And we were talking about different ideas for starting up a company together. And I had just flown in. We met in New York. I'd flown in. And I'm an enterprise software guy. That's my background. I've always been in the enterprise software space. Began my career at Oracle, worked in enterprise technology companies, both large and small. And I was working every day with people who are buying enterprise technology solutions. And I said to Naftali at this dinner, I said, it's amazing, remarkable that when I went to choose a hotel to stay at for my trip to New York, I used TripAdvisor reviews, and I had more information from peers to make a decision about what hotel to stay at than these enterprise technology professionals who are making these really critical decisions, making decisions about $1 million purchases or purchases that are going to make or break their career, can save their money, their company a tremendous amount of money. They can be rock stars, but didn't have access to the opinions of their peers. That just didn't exist in the enterprise technology world. And so we started to talk about, well, what does that mean to start a review site for not only B2B, but for enterprise technology? And over time, we started to learn about, well, it's not just like Yelp or TripAdvisor. It's very different kind of things about it. But it was at this dinner, really just recognizing the fact that reviews are so influential as consumers, and how do we apply that to a business-to-business enterprise world? In fact, many of the best companies out there in the world are ones that have just thought about other successful businesses, and then how do you apply it to a different domain, to a domain that you're very knowledgeable about, that you have this unfair advantage about. And that's exactly what we did.
I love that because it's so funny. I come from that enterprise IT space as well, software managed services. And I thought the same thing. I'm like, it's got to be so hard for these guys. Now, granted, I didn't take the initiative like you did and start a company around it. Otherwise, our chairs might be opposite, right? But my point is,
you'd have less hair. Believe me, Ryan, you'd have less hair if we switched seats.
No, I appreciate that, man. But it was funny because I was thinking about it, like when I went through and the IT executives would basically say to me, like, Ryan, like, it's so hard to figure out like who's good and who's not, and like you spend so much time evaluating projects. So I could see where there'd be a massive opportunity to help people with that, because I mean, firsthand, decision makers express that to me time in and time out. So kudos to you for making the move on that.
Absolutely, Ryan. If you talk to people who are making those decisions today, for enterprise software, they say that, over the last 5 years, 10 years, they'd rely on Gartner. Gartner would be the most, say, influential or well-known influencer of how they make decisions about what vendors to choose or what products to buy. And if you ask them consistently, and this is what we did in our early research, they said they're just very skeptical of the data that they get in these Magic Quadrant reports. Why is it? And again, for those in the audience who don't know, Magic Quadrant report is Gartner's ranking of different products and vendors in the market, and there's no transparency. No one knows why a dot is in a leader's quadrant and why a dot is in a different quadrant. These reports are put out maybe once every 1.5 to 2 years. They're not dynamic, they're not online, and they're not personalized. So there's a perception of pay to play. At least that's the perception in the market. And so when we started to talk to these people who are making these enterprise technology purchases, that's what we kept hearing time after time. They were very dissatisfied with the advice, the way that they can get the best information for their purchasing decision. And again, that gave us further validation for the idea.
Yeah, so I love that, and great job of running with it. So Russell, so let's talk about that. So a 9-year overnight success. I love how you categorize that, right? Which is, it's kind of funny because I'm finding it more and more. Like you hear these press releases where they're like, they went from 1 million to 5 million in 1 year, but the prior 3 years they had zero revenue. Like they kind of leave that part out of the press release. So I think it's awesome that you're candid about the journey on the way there. So why don't you talk us through a little bit about what the journey was like from 0 to 1 and how long that took, and just kind of what was involved with that, because that's a really hard kind of threshold to get past for a lot of people.
Yeah. I think every stage is hard, but certainly there's some unique aspects of that sort of early 0 to 1 stage. And you've got to be patient. You've got to be patient because you've got to spend a lot of time understanding customer needs, building a product, and getting to a good amount of product market fit, building out an MVP at least, and be able to validate this is something that customers want. Because whatever you come up with, whatever your initial, and I've been involved with a number of startups, and my background is on the product management, product marketing side. Your initial idea for a product is never what you end up going to market with. There's always going to be changes as you get more and more customer feedback. So you've got to be patient. And patience is, first of all, having the financial wherewithal to be able to support that, right? So before you start a company, you really have to have a discussion with yourself about, am I set up to be able to support myself and whoever else is there on the journey for 2 years without any revenues, without any potential investment? Again, you can try to sell your idea to VCs early stage or to angel investors, but you'll actually probably come out with a better product, like it worked out for us, by not spending your early stages talking to investors, but spending your early stages really understanding market needs, customer needs, building product market fit. But you've got to have that sort of 2 years. That sounds like a long time. You got to sort of build that 2 years. And that means that, if you've got a partner that, you share a household with, that partner also is supportive of you. My wife, was very supportive of me. That would take 2 years. And we put, I made investments in the company to be able to support our initial, I wasn't just not taking a salary, making also investments in our staff and the expenses of the company for the first 2 years. So when you have that support, both within yourself as well as your family or your partner, what have you, then you're set up for success.
Yeah, I could. The emotional factor is something that a lot of people kind of gloss over, and I think it's smart that you have the expectations of like, hey, this is going to be a pretty lean operation or lean go of it over the first year or 2 years, I should say, that you're going through it. So how did you create revenue when you're going
Yeah.
through that stage? What did you do? What
Yeah.
was your revenue model or monetization model? Kind of how did you start to get the engine running?
Yeah. Well, first of all, the beauty of it is we never pivoted. So in our 9.5 year history, we're continuing to execute on the initial vision. Again, so some of the functionality, features, product offerings have changed somewhat, but the vision has really been consistent for our entire period. So we were about, as a review platform, enabling enterprise technology companies to get to surface the
Hmm.
opinions of their customers for their customers, to make it easy for their customers to write reviews, and then to enable those buyers to be able to read reviews and contribute reviews and be part of the community. And so we monetize our customer base are the technology vendors, software companies, companies like Cisco or IBM or Microsoft, those types of and cybersecurity companies and IT management software companies and venture-backed companies as well. And so we knew who our customer base was, even in the early stage. We knew what kind of offering that we were going to be providing them. And in the early stages, it's about finding that early champion. And they come out. They come out. I mean, you have to spend time with them. You have to cast a wide net. But it's amazing how many people got it early on. And then when you find those champions who believe in your vision, right? You have to articulate your vision, share your vision, develop a relationship, right? Meaning lots of dinners and and beers and early breakfasts or whatever was needed to meet with some of these potential customers. And then when you find a few that really believe in the vision, then they'll take a chance on you. And we were fortunate. We had a number of visionaries mostly in the Silicon Valley area, enterprise technology marketers who understood the power of voice of customer marketing and the power of using reviews in their marketing. And they were the ones who are initial customers. And so, how did I find those people originally? Uh, Certainly I tapped into my network. That was helpful. Not every entrepreneur has a broad network, so you just got to continue to find people who could help you. Go to as many trade shows as you can. There aren't as many trade shows these days, but whatever you can to network, you do have to do a tremendous amount of networking in order to find those people who will be your early advocates, who will take a chance on you.
That's great, man. I once again, you're talking about the raw work or the dark work, I should say,
Yeah,
of the meetings, the dinners. I went through that before when we started the enterprise group. Where I specifically remember, I tell this story all the time. We had a meeting in Atlantic City, New Jersey, right? And then we basically one of my guys on my team heard or was able to get through finally to a prospect he was chasing. It was the $8 billion company, I think maybe $10 billion, called LKQ, which does remanufactured auto parts. They're probably one of the biggest publicly traded companies that nobody's ever heard of, but they're highly profitable, do a great job. And so we had a late meeting, dinner meeting, had to take them out, and the guy's like, yeah, well, I could meet the next day. And we're like, oh, well, we're going to be in town, right? And we're going to be nearby. And this guy was in Nashville, right? So we jumped on a 5 a.m. flight
yeah,
from Jersey City or New Jersey to Nashville, had that meeting, and lo and behold, that ended up becoming our big first customer that we got, which was, I think it was like 2 or 3 million in annual revenue, ARR. So yeah, you never know, and so I think that's awesome that you did that. What was your selling motion? I love the fact that you use referrals there as well.
Certainly our selling motion has grown, matured since day one. Day one, and getting from 0 to 1. I was very involved with every sale, and we had a couple of very talented salespeople that we hired on early on, who've gone on to now be sales leaders. And Today, we've got a very mature SDR, sales, customer success organization with a pretty strong playbook for bringing on new deals and signing on renewals.
Oh, that's awesome. So yeah, and then I heard you say you tapped into your network a lot. Um, let's keep moving forward a little bit because I'm a strong believer in scaling customer to customer referrals, and
Yeah.
reviews is a strong part of it. Is there anything that you leverage in your business that works really well when it comes to referrals, or I should say also on the review side, like what are the biggest byproducts of companies leveraging that?
Yeah. So reviews are I'll first of all just talk about what we see in the market. Reviews are obviously super powerful. If you ask anyone who's buying enterprise technology, then they'll tell you that real user reviews that are authentic or genuine are the most influential. In fact, they'll even tell you that the most influential reviews are not those 5-star reviews, it's 4-star reviews. It's things that are authentic, right? So it's all about authenticity, right? On one hand, you have to, as an entrepreneur, be, have your vision, sell your vision, but you have to be authentic. And so reviews are similar in that regard as well, in that, for instance, on our platform on itcentralstation.com, the reviews that you'll find there are much more in-depth, longer form reviews than you'd expect, like in a Yelp or a TripAdvisor, much more in-depth. And also, each review has both pros and cons.
Mm.
And so that way, it's more genuine, it's more authentic, because in the enterprise software world, there ain't no such thing as the perfect piece of software. And also, there's nothing out there that's just completely worthless. And so when you've got a platform that's providing that authenticity, then those reviews are much more influential in the market. And so that works for reviews, and I think also just works. Uh, that's good advice. I think just for anyone out there in the market, whether you're in sales, whether you're in marketing, whether you're an entrepreneur, is really just be authentic. Because if you're too over the top, you're trying to sell too hard, then you lose credibility, and some type of authenticity establishes that connection. In fact, that vulnerability makes a stronger connection with people, and that's something that, again, the data shows it about reviews. The most influential reviews are 4-star reviews, and just as a person, you just learn that kind of authenticity is so valuable.
Okay, so a couple of things. I love what you said. Your scale is 1 to 5, right? Are there 4.5s or anything like that, or is it just 1 to 5?
Therefore, yeah.
Okay.
There's half stars, exactly.
Okay. So half stars. So it's funny you say that. So are you familiar with? Do you know Todd Caponi at all? Have you heard that
Not
name?
sure.
So he was a former sales leader, revenue leader at Power Reviews, and he wrote
Yep.
a book called The Transparency Sale. And I've had him. He's a friend of the show, friend of the family here. Great guy. I should connect you guys. He wrote a whole
Okay.
book on behavior science, and one of the things he talks about is reviews, specifically with what you're referring to, where he's like, most of the time people skip the 5-star reviews and go straight to the 4-star reviews because they believe them more, right?
Absolutely.
So how did you, I guess, like, I think that's really unique that you put the pros and the cons, because I've never heard that before.
Yeah.
So in doing that, like, I guess, what are the top 3 criteria when someone's evaluating it cold and they're looking at your review? What do the end user or the buyer, what do they most often look at? Because I think that could be
Yeah.
highly valuable.
Absolutely. So first of all, like I said, there's it's all about trust and authenticity. So in addition to
Mhm.
providing reviews that have both pros and cons, what we learned, again, the early stages, right, when we were building IT Central Station, is that enterprise technology professionals are, if they smell a fake review, they run the other way. And we said we want to build a company, an epic company, a company for the long term with a great reputation in the market. And so we had a commitment baked in from day one that we were not going to have any tolerance for fake reviews, zero tolerance for fake reviews on our platform. Very different than TripAdvisor or Yelp or Amazon, right? Where they say 10, even 20% of those reviews on these B2C sites are fake.
Wow.
Um,
I didn't
we,
know
we
that.
said, yeah, we said that zero tolerance for fake reviews. So we have a triple authentication process, and we're diligent in terms of ensuring that there's no fake reviews on our platform. And we learned that that's earns us a lot of respect with the enterprise technology community who's looking for trust, looking for authenticity. Um, so that's, I think, really an important thing that we learned in terms of the value and how you think about reviews. And then we talked about pros and cons is certainly an important part of it, the balance. And the third item is really transparency. And we're a big believer in transparency. Our business model is transparent. Our rankings are transparent. Unlike a Gartner Magic Quadrant report, we often get compared to Gartner in the market, where a Magic Quadrant report, there's no transparency into why a dot is in a certain part of the quadrant. Again, for those of you who don't come from the enterprise tech space, they do rankings of products, but there's very little transparency into who gets ranked highest, as opposed to on IT Central Station, where the ranking is fully transparent. The algorithm is transparent. You see who's providing the reviews. And so that transparency is also critically important in today's market.
Okay, so there's so many different ways we can go down this, and I want to ask you one more question on this. And I want to move on because otherwise this interview
Yeah.
is going to be really long. So how do you triple authenticate?
Yeah, so it's three steps. So the first is we have an integration with LinkedIn. We're a strategic partner with LinkedIn. And so when someone provides their LinkedIn details, either through our platform or by providing a review through our call center, then we validate their LinkedIn profile to ensure that they don't work for the vendor of the software product that they're reviewing. They don't work for a competitor. Their job title matches what someone who's using that product. So if it's a review of a cybersecurity solution and the person's job title is marketing manager, that obviously that raises a red flag that we then follow up on. The second step is we have an in-house team. So we have an in-house team that does quality assurance of every single review. We, if not eyeball, then read through every single review that gets through the platform before it gets published on itcentralstation.com. And so what we found is really it's about quality and not quantity. Unfortunately, some people come into the review space and just think it's all about millions of reviews. But the fact is, one high quality, trustworthy, valuable review is worth more than 100 reviews that you can't trust, that you're not sure where their source is, that you don't know much about it. So the second is our in-house team that we invested in that reads through every review. And then third, we have our community. So we enable our community to be able to flag every single review. At the bottom of every review, there's ability to flag the review. We have a very active community in our platform who are sharing their ideas, sharing their reviews, answering questions, helping others make better buying decisions. So that between that technology, in-house team, and the community, we're able to provide a zero fake review guarantee.
That's awesome. I love it. I love the focus on quality. And how did you build up that community? Because since you kind of have a platform play, it's
Yeah.
unique, right? You have the enterprise software providers that are the customers, and then you had to build
Yeah.
up a community of people that consume it. How did you do that?
Yeah. So we have a community of registered members of over 580,000 registered enterprise technology buyers. And the way we've built it is by really, it's about trust, transparency, getting the trust of these technology professionals who would come to IT Central Station and they'd see the kind of reviews. And in order to get our buyer's guides and other premium assets, they would have to register. There's no cost associated with it, but we would ask them to register, provide their contact details, and join the community. And so we have a very large community of people who have opted in, provided their contact details, part of the community, and they stay engaged because they see that basically they've benefited from other people who've shared their opinions. The number one driver for people to contribute content online on any site, whether it's Reddit, whether it's a review site like IT Central Station, whether it's TripAdvisor reviews. The number one driver is actually altruism. It's not paying, it's not for like getting a gift card to write a review. The number one strongest driver is to be able to help other people. So when people see that they've been helped, they read reviews that are genuinely helpful, and they see that they was contributed by other people, they're willing to give back to the community. And so we've really activated that as part of our model. We really use it's really learning from the Maslow hierarchy of needs. And the highest form in the Maslow hierarchy of needs is self-actualization. And that means to enable a business professional to be able to help others is at that highest self-actualization. You're actually contributing, making the world a better place, making others more successful in their jobs, all those things. And we activate those levers as opposed to some other review sites out there, which just go around and throw around gift cards to people to provide reviews, which may convert into reviews and does convert into reviews, but that you're not going to get a community built that way. The way you build community is by enabling people to help others, not by paying people to write reviews.
I love that. I love that because that aligns with, I mean, I do revenue sprints with founders around scaling customer referrals, and it's aligned with what you're talking about. So it's like give to help someone first. And most people that I talk to when I'm consulting with clients is they're like, okay, so we got to give them a gift card. And I'm like, no, that's usually not the best way to do it. That's usually the worst way to do it. Right.
Right.
So how did you
pay it forward?
Yeah.
Exactly.
So how did you accelerate those reviews, like going throughout? I mean, you have a more mature marketplace now, but how did you grow that side of the business? And then I'd just love to hear that, because I would imagine a lot of companies have a hard time starting to get it. So I get it. You got your sponsors doing it, but how else did you get it rolling?
Yeah. So you're identifying what's called the chicken and egg problem of marketplaces, which is a known issue, right? So with us being a marketplace or a platform, we have buyers and sellers. And so there's other marketplaces, other platforms out there. And it's well known that the hardest challenge in the early days is getting past that chicken and egg problem, meaning having enough buyers on your platform who are interested in using the platform, and then having enough sellers on the platform. And that's what we worked on in the first few years. And it's about selling both sides, right? So I told you that, we talked earlier in the podcast about how, in the early days, tried as much as possible to get those technology companies to start to get involved and start to use IT Central Station. But similarly, we also spent a lot of time finding those early community members who wanted to be thought leaders and would provide us 1 review, 2 reviews, 5 reviews, 10 reviews, tell their friends, post it on LinkedIn. Again, not because they're being paid, but because they're part of something bigger than themselves, and they're really excited about it. And again, you see that also in places like Wikipedia and Reddit and others, these super contributors. And it's about identifying those super contributors. Yeah, and I would, I'd like their posts on LinkedIn and share it with my community. We highlight some of those people on our blog. There's all these types of ways to reward your early fans, and usually through having them feel like they've been their content, their reputation has been enhanced by their association with your platform.
The increase in status, right?
Status,
the power,
exactly.
The super user, and then the increase in status. So
exactly.
Awesome. Love that, Russell. So what would you say is the biggest mistake that you made on your way to growing to where you're at in terms of 8 figures plus right now?
Yeah. When you talk about mistakes, I think the number one mistake is dwelling on mistakes. As an entrepreneur, the number one mistake you can make is dwelling, because you're going to make mistakes. I've made plenty of mistakes along the way, strategic as well as tactical. And you want to learn from them, right? So we have a culture here of always be learning. It's really important to learn from mistakes that have been made. but then you have to move on, and you just have to take the new reality. And so that is probably one of sort of the big lessons and things that I try to impart also to my team, my management team as well, is when there's things that we need to bounce back on, let's just understand, learn from it, and then just move on.
That's great advice. I love that. So, what would you say, like, if you looked at it in terms of growing revenue, what was the number one, or the top three, I guess, or like a framework around the best thing that you've done as an organization to kind of get to where you're at as a today,
Yeah.
where you're at today?
Yeah. So I think we have a really special story because we were bootstrapped for so long. So the things that we had to do to get to where we are today are probably different than let's say a venture-backed company from the early stages. So being bootstrapped, we had to be laser focused on customers and frankly on cash. Frankly on cash, right? Where if you're a VC-backed company in the early stages, you're going to be very focused on revenues, and cash is secondary. When you're bootstrapped, actually cash is usually first and then revenues. I mean, obviously you want to grow both as much as possible, but you don't want to be in a situation where you're a fast growing company on the revenue side, but the cash isn't keeping up with it. So we continue to think about kind of product offerings that will enable us to uh, collect cash from our customers more quickly. And we early on, even for a very young company, we collected 100% upfront. That was important to us as a business. That again, maybe wouldn't have been as important to us. Now that we just closed a $30 million growth equity round. We're seeing a little bit the shift there, where the focus now is going to be more on revenue growth rather than on cash becomes secondary because we have so much cash now in the bank. But that was sort of an interesting sort of learning and difference for a bootstrap company. And then the second item is laser focus on customer success. You've got a customer, you do not want to lose it, and you want to delight that customer. And it sounds trite. It sounds like, everyone says, delight your customers, keep your customers happy. But again, as a bootstrapped company, every customer is super important because, we talk about the CAC to LTV, the customer acquisition cost to
Right.
long-term value of a customer. And you don't have, as a bootstrap company, the ability to just throw more and more. You want to keep that customer acquisition cost low, and you want to have that really long-term value. So we invested really early in customer success. I'm really proud of the world-class customer success team that we've assembled. Uh, we pushed our customer success scores up to world-class levels. Our average is over 70 over the past 4 quarters. We
Wow.
do NPS scores quarterly. And that discipline of really focused on the customers and high touch customer success was also something that we needed to do. You'd say, wow, that was a smart strategic thing, but we needed to do that as a bootstrap company because we didn't want to lose any customers and we wanted to ensure that we're building customers for the long term. So I think those are sort of the two maybe non trivial sort of learnings being a bootstrap founder that's different
Hmm.
than a VC backed founder.
Okay. Yeah, I think that's really strong advice. And anything specifically you did to delight the customer that you once you figured out, you're like, that's absolutely amazing. Why didn't we do that sooner?
Yeah. Well, there it's about listening to customers. That's the most important thing because as much as we think we know what they need, always surprised. And it's not. I still join customer calls, even though we've grown considerably. I'm still spending a good amount of my time listening to customers We use Gong. So technologies such as Gong have been tremendously valuable, enabling me to do that in an efficient way where I can listen in on calls with customers that our customer success team manages. But you really, really just have to listen. You have to be a good listener. And especially as a young company or when you've got a young team, and we have a very young and talented team, but there's this sort of feeling to just talk a lot. Let me, sell and pitch and tell you and share. The key thing is to listen. Be quiet, be quiet for a bit and listen. And you learn tremendous amount, and they share with you and they appreciate. And obviously you have to then execute and do what you say you're going to do. But that's a superpower. It's just listening well to customers.
Strong advice. Okay, last question before we kind of wrap things up. And I want you to share with everybody where they can find you, how they can learn more about you and your company. So why would you recommend a founder not to take funding, before they get to the point where you're at in 8 figures? What's the number one reason you'd recommend not taking out funding?
Well, if you don't, what's so valuable there is it enables you to focus on product market fit, really ensuring you've built a product that customers want, customers are willing to pay for, right? The definition of a company, according to Peter Drucker, so the godfather of management theory, the definition of a business is one that has a paying customer. You've got a customer and they're paying you. And so if you raise money or you follow all these companies, unfortunately, some of them sort of lose sight of that. And people think that building a company, the definition of a company is just raising money. And unfortunately, that game can run out pretty quickly. But if you focus on building a company that is customers that pay you, then you've got a really strong foundation. And then take money, right? Once you've hit product market fit, that's the best time to take money because you figure out how to do it. You've built the foundation in place. You know how to scale. Then you want to bring in external capital so you can grow more quickly. But taking on capital before you've hit product market fit could be risky.
Yeah, it was funny. So you've heard of TechCrunch before, I'm sure.
Yeah.
So they did a comparison between TechCrunch and Thrive, and TechCrunch sold, I think, at 30 million, and Thrive sold for 150 million. That's with Adriana, I think it's Adriana Huffington. And so basically what happened was they did a comparison, and the guy who bootstrapped, I can't remember the founder's name at TechCrunch.
Mike Arrington, I think. Yes.
Oh,
yeah.
Okay.
Arrington, I think. Yeah.
Yeah. Sold for 27 million, got $27 million out of it. And then at Thrive, Adriana, she's from Huffington Post, I think. Huffington. Yep. Yeah. She only made 17 million off of it. So because she took funding and TechCrunch didn't initially. So there could be a big disparity too in terms of payout, I would assume, if you take it too early.
Absolutely.
Okay. Well, Russell, it was awesome having you on. I love your insights, man. I love your energy and your positivity. And you could tell that you're really trying to do right by the world and be authentic, which the world needs more of. So can you tell everyone where they could find you, where they could learn more about you and your company?
Sure. So first of all, I'm happy to connect. You're welcome to follow me on Twitter, Russ Rothstein. On LinkedIn, you're welcome to send me a connection request. I'll also encourage you to visit itcentralstation.com. Starting in January 2022, we're rebranding to PureSpot. So we will be called PureSpot.com starting January 2022. So please visit our site, connect, and stay in touch.
Excellent. Well, it's really great having you on the show, and definitely check him out. He's dropping some great posts, I know, on LinkedIn, which is how we connected in the first place. And really excited about where you and the organization are going to.
Thanks for having me, Ryan.
Yeah, thanks for being on.